Hello and welcome to Misaal. My name is Zahed and I'm your host. On this podcast, I talk candidly with the most innovative minds working towards building a better startup economy in Pakistan. In this episode of the Misaal podcast, I talked to Mubariz Siddiqui. He is known as the go-to lawyer for startups in Pakistan. He advises entrepreneurs and investors on a variety of legal issues, including term sheets, regulatory compliance, and deal structuring. We discuss the current funding climate, growth stage funding crunch, foreign VC motivations, typical startup valuations, founder dilutions, and preferred corporate structure for VC fundable startups. Let's listen in. Welcome, Mubariz, to Misal Podcast. How are you?
I'm very well. Thank you for having me.
As a startup lawyer, as the only startup lawyer people talk about when they talk about a lawyer in Pakistan dealing with startups, what are you seeing in the market? Are investors rescinding the offers or term sheets? Are investors ghosting startups? Like, what is your sense of generally what's happening on?
I'm seeing a bit of both, right? But mostly everyone's fairly cautious. I'm not seeing a whole lot of deals in the pipeline. I think people who were going to raise a significant amount of capital, they're reconsidering their models. People who have raised a lot of money and were burning through a lot, they're reconsidering their models. Uh, just from a just like good basic sense is that if you're going to raise today and will need to raise significant or like further capital within the next 18 to 24 months, those deals are not really getting funded very easily. If you're raising today and that is enough runway for you to meet your targets, have some growth or have some product market fit, I'm talking about pre-seed right now. If you're raising today and you can do that within the raised capital, fantastic. I think those businesses are still interesting for most investors. But the businesses that require a lot of burn and require you to constantly raise financing, those are either struggling or not getting funded at all right now.
In the past a couple of years or 18 months, I would say there's a lot of startup funding, right? A lot of startup funding happened, a lot of records were broken. All those startups are now eventually going to need to raise series. If they have raised seed, they will have to raise series A. If they have raised series A, they'll have to raise series B. So right now, the globally, the issue is series B and series C. That's where the difficulty is. So given that all these startups raised so much money with such high valuations, what do you think founders should be doing at this time in terms of raising cash? Should they be doing a down round if an investor is willing to come on board? Or should they maybe wait a little bit more and see if this already turns out to be not that big of a deal and things start to stabilize?
I firmly believe, and a lot of people think that this is a big deal. I don't think this is going away immediately. I think we're heading a recession, which has been long overdue. So there's no two ways about it. I would I my advice to any founder who can raise would be to just raise. If it's not a significant down round even, but if it's crucial for your survival, absolutely you don't really have a choice. And in those situations, I'm seeing some deals where later stage companies are raising at not a significantly higher valuation or almost at the same valuation as before, but the fundamentals still make sense. So you still have investor interest, and we will see some of those deals happen as well. I'm still not sure about record-breaking rounds. Last year, we were expecting things to slow down. We have been expecting things to slow down for a while. It's just that last year we thought some of the bigger deals that we were expecting, and some household Pakistani startup names that we were expecting to raise, some of those deals did not go through within the first quarter and a half. And now those deals or those sizes of investment at those valuations seem fairly unlikely. So I would say if a startup can or if a later stage company can raise to protect their runway for at least 2 years or extend their runway to 2 years, I think that's the smartest thing they can do right now.
So you basically used to work at Sarmayakar and then you went on your own. While you were working at Sarmayakar, you were probably like getting only the deal flow, or you were getting access to deals that were coming through Sarmayakar. Now that you are independent, you see a lot more deal flow. And I'm pretty sure there are other investors that reach out to you. I have always been under this impression that when a foreign investor is trying to invest in a Pakistani startup, the reason they are doing that is because they have too much capital and they want to just diversify. Their reasoning is not because, they want to see Pakistan become like, this amazing country where everything is prosperous and all that stuff. What is their thing? Like when they invest, people who might not have stepped in Pakistan, like I see these cap tables of these startups that raise money, and it's like there are a bunch of different investors. Like some of them are very sector agnostic. Some of them have never invested out of US, but they are now investing in Pakistan. So it just seems all over the place. So what exactly is going on?
So I fundamentally believe that no investor is trying to fix a country, right? I think I think if you can take the savior complex out of the investment, you'd be a better investor, and that's I think what people are doing. I think most investors genuinely believe there's an opportunity to make a decent return from Pakistan, given where the country is, given how we're late to the whole digitization party, which the whole world has caught up to, and we know what kind of models work in similar markets, what don't. That's why I feel Pakistan is still somewhat of a de-risked in certain ways. As far as business models is concerned, we're fairly de-risked because we've seen these business models work in other countries. There's a lot that there's still to be uncertain about around Pakistan, which is again where the exits will come from, where the follow-on capital will come from, etc. But coming back to how the investors were seeing it, in my conversation, and even today, there are new investors entering Pakistan even today, like recently, and still considering deal opportunities in Pakistan, like as we speak. And it's simply because they truly believe that Pakistan can have businesses that would make money, would exit, and give these investors a decent return. So it's just that. I don't think anyone thinks or can really just I don't think venture capital is the solution to all of Pakistan's problem.
Exactly. Okay. Yeah.
Anyone who thinks that is up for a rude awakening.
So what does like a pre-seed Series A ownership looks like? What does the dilution look like for founders? Like by the time they have raised their Series B or Series C, like do they even own 50% of the company, or is it just gone to investors?
Depends, really. I've seen all sorts of cap tables. People who raised early on, by early on, I mean pre 2018, before more institutional capital came into Pakistan. I know Sarmayakar was one of the first institutional funds in Pakistan. And then a lot more very quickly followed. They institutionalize best practices like across the world, right? Number one, there's a lot of education in the market required for why a cap table of a venture-backed company or a venture profile company has to look a certain way, with why founders incentivize more, why a company that just has a pitch deck and a dream still is worth X $1 million, given Pakistan, most of these startups are valued at more than a lot of PSX listed companies or businesses in Pakistan that make significant money. It's so that education component was required. So right now we're seeing all sorts. We're seeing best practices. Really, there's certain investors who have minimum stake considerations. Certain investors who have who would add value, time, etc., on top of capital in order to attract that minimum stake or justify that minimum stake. So I I haven't seen a really bad cap table where any of our newly institutional venture capital funds are involved, right? Well, so by those guys, I mean the main ones: Micah, Indus Valley Capital, Zing Capital, Fatma Gobi, I2I Ventures. All of these guys have been really putting, and even some really like some active angels, right? Those guys have been instituting best practices. So I haven't seen a really messed up cap table over the past 2.5 years. But predating that, we've seen all sorts of stuff, right? We've seen founders with nothing, we've seen investors with everything, and those businesses have not been funded subsequently.
Just averages, just numbers. If you had to throw some numbers, like what are we looking at pre-seed, seed? Like what are the averages?
We
10,
see
20, 25?
depending on how much the founders have also are raising. So I'll just get into the valuation and then you can do the math around dilution. Typical pre-seed valuations last year even went up to 10, right? If you went to YC or something, your pre-seed valuation was 10 or 12. So depending on how much capital you raised at that valuation, you can just account for the dilution as well. But I know some investors who have 20 odd percent in the pre-seed. And that comes with a large check or largest check plus a lot of input. I've seen investors who've just done 200K at or 500K at anywhere between 7 to 8 or 5 to 7 million post money cap. So that just you're looking at 10%, 7 to 10% dilution. We've seen all sorts of deals going on, but one thing I'm seeing now is that those 10 million pre-seed valuations, they're not flying anymore.
Yeah. It's funny you mentioned YC because YC sent out this memo that everyone is talking about everywhere. And it's like, YC sending out that memo is like, Facebook lecturing you on how to maintain your privacy settings. It's like, it doesn't make any sense. Right? Like YC is the reason startups are overvalued and have been burning so much money because it always was the expectation that someone else will come and fund you even at a higher valuation. So it really doesn't make any sense. But anyways, so when founders are trying to raise money, so besides the whole market dynamics, what other challenges are they facing in terms of like maybe legal, maybe regulations, maybe something to do with stock options? Like, is there something that is becoming like a big issue over time as startups raise more and more money?
We've solved most of the major issues, right? Before, the biggest issue was not being able to set up holding companies. And we can discuss that in more detail as well. But that has been solved. Right now, I think the regulated startups are on a legal front. For example, if you want to do fintech related stuff in payments, getting any license from state bank, you're looking at a year and a half, 2 years, even for your provisional one, and then pilot, etc., and all that compliance. Similarly, SECP's NBFC applications take significant amount of time. I wish the regulators streamlined their own policies, their own requirements for information, for data, the form in which they require it. Not everything needs to be on an affidavit that needs to be attested from ABCD. It's a big. These are small things, but they make a big difference. Especially startups that want to move really fast. So yeah, those are the challenges.
You talked about like holding companies and all that. So let's talk about it a little bit more. So how does a startup, let's just say a startup has decided they want to work on a product and they have decided that they will raise money, like they won't be bootstrapping or anything. How do they structure? What are the investor requirements right now in terms of how to structure the corporation in Pakistan?
Ideal structuring should be where you have one company and that does everything. That's what the shareholders own. So there's one Pakistani entity which everyone should own, and that does everything. So you have no layered ownership. It's the simplest way to do it. But in most venture situations, that's not how these deals are structured, because a lot of most foreign VCs have jurisdictional requirements. So they say we are only comfortable with ABCD countries. So you need to form a company there. So especially, let's go back to YC. YC has 4 countries that they invest in through. So it's either US, Canada, Cayman, or Singapore. So Pakistani startups, my advice generally is that once you have visibility around your round and you have confirmed investment interest and someone wants to invest in you from abroad, then we set up a holding company in that jurisdiction. So, for example, Singapore, that's where the company was set up. And then we would have a Pakistani operating company. The Singapore entity would entirely own the Pakistani entity, and the shareholders, all of them, would own the Singapore entity. That's the predominant structure. Most people prefer Singapore generally from Pakistan because tax-wise it makes sense. And other than that, it's acceptable across the board. For Asian investors, MENA-based investors as well, US-based investors are used to it. And a lot of startups want to go to IC, so it works for them from that perspective as well.
When we hear things like, a startup raised $10 million, does that $10 million come to Pakistan?
That's a very good question. And there's this misconception around people think that somehow all the investors are okay with all that money just sitting somewhere in an account, right? But no investor is okay with that either. If I'm doing a startup to raise and I'm raising capital, it's to achieve something. And to achieve that, I need that capital. So typically, what's my burn? I need to pay salaries. That money will be paid to my employees in Pakistan, whoever is in Pakistan. I need to build out product again, people. I need to do marketing in Pakistan. I need to do brand activation. Whatever expenses are in Pakistan will happen in Pakistan. But if I need to pay Facebook for marketing, I can just pay it from abroad. So that money, even if we had entered Pakistan, would have never stayed in Pakistan. All that money, number one, State Bank requires you to bring most of that in. And other than that, if what am I going to do as a startup founder if I'm not going to spend that money? Why did I raise it? Why did I dilute myself?
What are some of the challenges like that you have seen startups face that when they come to you and they talk about the challenge, you tell them like maybe it's not the right time and it's too early? What are some of the things that startups should not be worried about early on at a very early stage?
The legal stuff, unless you're in a strictly regulated space like fintech, maybe if you're doing something that's heavily regulated, you should sure worry about it. And that's why most of my focus is with fintech related clients. But other than that, you shouldn't be really worried about your legal stuff. You shouldn't be really worried about certain contracts. Just focus entirely on validating whether this is something you want to build. And only then, once you're sure, once you have financing, that's when you spend on structuring, that's when you spend on other things. But some people just want to get that Singapore holding company ASAP, not realizing that shutting it down, that there's a cost element to that. There's a cost element to a lot of different things. So, and tomorrow, if you decide not to do it, you're paying more. So yeah, my advice generally is just focus on the business, validating the business, and do the whole fancy structuring once you have capital.
When founders come to you, like this is one thing that I have in my personal experience felt when I have spoken to different founders, is that they generally don't understand how a VC works or a VC fund works. And is this something that you can talk about a little bit more, like just a general overview of how a VC fund works and what are their requirements in terms of what kind of returns they have to, or they have already promised their LPs? What is it in your experience startups should know about a VC fund?
So I was sitting with friends yesterday, and this thing came up, and they spoke about how Mubariz, like a broken record, talks about the same issue. But I'm going to talk about it again. Then I think what a lot of founders don't realize is that for a VC to return a significant amount of capital, or the return amounts that would establish their credentials as great VCs, the return they're expecting from each investment is kind of ridiculous of sorts, right? So if I have a 25 million fund, 5 million, let's just park it as management fee. So I have 20 million of investable capital. If I'm going to return a 5x of a 25 million fund, I need to return 125 million. So basically, in order to return 125 million, the 20 million that I invest has to multiply, right, by it's roughly 6x. So that's my investable capital. So and now let's go back to how many of these investments are going to work out. Now, everyone across the board acknowledges that 8 out of 10 or 9 out of 10 VC investments would fail, right? So let's say we equally distributed 20 million in 10 opportunities, and 16 million failed and 4 million succeeded. Now, for 4 million to convert into 125 million, that's 20x is 80, 30x is 120, so around 31.25x. Uh, that's the kind of return a venture capitalist is looking for, right? Every investment they make, because they know most of these will fail, but the upside needs to have that potential. The upside needs to have the 30, 40x potential for them to be able to return the fund. Now, of course, they won't equally spread the money. They do a discovery check first, it's a smaller check. And then pro rata is only exercising the winners. I know, like, that distribution happens that way, but again, uh, if we come back to the fundamentals, you are looking for 20 to 30, 40x return. Is That's how you're going to be a rockstar VC and be able to, like, raise subsequent funds, or have that reputation.
So is there I mean, so I was reading somewhere, actually AngelList had this research out which said that only 2.5% of startups that receive seed funding end up becoming unicorns, so worth $1 billion. And that to me is a mind-boggling number, because I mean, this is of course related to only AngelList, doing seed investments through its own platform. But let's just say the number is like double, right? Like for everything else, still only 5% of seed investments end up becoming unicorns. So recently there was an article that I read about, like, who's going to be the next unicorn. Oh, I mean, who's going to be the first unicorn in Pakistan, right? Airlift and Bazaar, of course, come up. And so I was just doing the math, and I'm like, okay, Bazaar or Airlift have to, I don't know, maybe do $100 million in revenue for the year to be worth $1 billion at 10x. If let's just say that's what they're going for, and I don't see them doing $100 million in revenue. So, I mean, do you think we will see a unicorn this year?
I don't think it'll happen this year, that's for sure. But will we eventually see a unicorn? Yeah. I don't think it's entirely about revenue either, because if it was, then most of these companies won't even be worth 300-400 million, right? Which they are. I think whoever comes in will end up valuing the business on different metrics, which is also okay. Like, Apna in India, which is one of their fastest unicorns, has zero revenue. And I'm sure there's many zero revenue or very low revenue unicorn examples. In Pakistan, I still believe that uh, if you're in one of those big sectors, we will have unicorns, right? Bazaar is in a huge sector, and it also depends on how you define revenue, right? I think Bazaar is probably doing closer to this 100 million figure that you talk about, but in terms of transactions processed or like goods sold through, it won't surprise me if they're not, like, if they're like more than 40%, 30% off from this 100 million TPV number, total transaction number. Yeah, it's not super far away. But again, when we talk about unicorns, they're made when someone comes in and values your business at $1 billion. And that, I don't see it happening in this market, but it's about people surviving the next 18 months. And the ones who survive and actually flourish in this time would actually prove their credentials out as well. So yeah, I'm expecting unicorns in Pakistan, just not this year.
What is your favorite startup right now? Like, what startup that you think is doing amazing or wonderful job?
Wonderful job in
Yeah.
terms of solving problems,
Yeah.
and in terms of just generally where I like. So I have a few favorites, but I'm also a bit biased because
Okay.
I mean, I'm biased because they are my favorites, because I try to not be super. So two different models for my own self is, one is just a simple fee. We do work, and we say Khudafis and we move on. And then there's certain startups that I have advisory positions in, and those are the ones that I generally truly believe in and like a lot as well. I really like Abhi Finance. I like what Umair and Ali have built, and speed at which they're building. I have very strong conviction on Credit Book as well. I think those guys are focused on the mission and not the fluff or the thing around it. And I work closely with them as well in certain areas, and I really like it. I like Uran. I think Uran is building a fantastic community and solving real problems from education to enabling access to finance. Moving away from fintech. In fintech, I also really like Hubble. Another one where a huge problem is being solved. But if I move away from fintech, I like collabs because I think Umar's mission is to just obviously there's all this office real estate that needs to be solved for, but other than that, I think the business solutions aspect there's some exciting stuff happening there. That's all I've got to talk about that. But yeah, just to name a few, these are my just top of my head ones. But there's some other really impressive, fantastic ones like Bikea, I still fundamentally believe is a great business. I believe it fundamentally solves a lot of problems. So yeah, there's quite a few, but it's I don't think the success is purely just dependent on their ability to execute. I think it's dependent on so many macro factors and so many other factors as well. So yeah, good luck to these guys. I hope they can actually achieve their vision.
Yeah, Bikea comes up every time I ask someone about a startup that they would recommend or startup that they would think is really doing great work. Bikea always comes up. So yeah, that's great. What is something that you want to see in the ecosystem happening in terms of like, okay, you would say like, maybe I wish there was a startup that was doing this because it seems like such a big problem to solve, but you're not seeing it?
That's a very good question. I still feel we haven't really scratched even the surface for health related matters, right? Health tech. I think we could be doing much better in terms of diagnostics. I think we could be doing much better in terms of urgent tertiary care. Again, coming back to my thesis, which I've been accused of speaking of like a broken record, is that it's not all problems in Pakistan or the big problems will be solved by venture capital. I think we need private equity as well, from all ticket sizes. Uh, so yeah, there's nothing that specifically comes to mind because I feel like we have quite a few. Well, and if I'm going to mention, by the way, now more startups are coming in my head. I
Yeah,
forgot.
sure.
I actually really like Sada Pay's product.
Okay.
And I'm not an advisor there or anything. So full disclosure, I'm just a customer who really likes their product. And another one was Jugnu that just came to my mind. And those guys have received significant investment, strategic investment from Sari, which I think is again a fantastic team solving real problems. So yeah, I there's no one particular problem that I would look at and be like a startup needs to come and solve for this. Besides what everyone has just gone for anyway. I always thought payments would be a big issue, right? Just as a consumer, like so. But I actually really truly enjoyed this other experience. Uh, which is yeah, it's stuff like this.
I mean, for me, it's always been one of those things where I have always wondered, like, why are there no SaaS or based startups in Pakistan, like, software as a service or other marketplace startups that are not like e-commerce related. But yeah, I mean, of course, I'm just curious about it, and I have not been able to get a, really good answer about why this might not be happening in a market like Pakistan, because I guess there are a lot of problems that need to be solved, and the market for those problems is huge, especially with e-commerce or anything to do with, I would say, fintech. So e-commerce and fintech seem like the two places where VCs want to pour in money. That's where the market is.
Again, when you look at venture capital, the kind of returns they want to make, what are the large markets in Pakistan? There's fintech, there's a recurring transaction model. There's your B2B supply chain, which is huge. Again, like you have $100 billion market, so you can create $1 billion companies in there. Then you have your what do you call it? Logistics generally. Agriculture is a huge market in Pakistan, but agri-tech companies haven't really been super valued. Like there's no agri-tech unicorn in India, which should tell you everything you need to know about potential of agri-tech, like venture-backed companies in Pakistan, right? So I would say VCs would initially invest in these businesses. But interesting that you bring up that no one really does SaaS here. There are some very good local SaaS businesses or software businesses that have a local audience and make money. So I would say TPS has most of Pakistan's banking software. There's Basis again in banking. One of my favorite companies to come out of Pakistan is Salesflow. Those guys do an ERP, and these are the same founders as Jugno. Those guys have an ERP that a lot of manufacturers use, and they have a DMS, distribution management system, with it. And these companies are making profits, healthy profits, and they have very good margins on it as well, like a true SaaS business. But coming back to your question, I was speaking to a regional investor who said that whenever I speak to a founder in Egypt, UAE, and they show their plans and in their market, they have Pakistan at the end as well. That, oh yeah, we'll grow into Pakistan and we go and take that market. But Pakistani founders are not thinking that way. A lot of them are not saying that, listen, it'll start here, but then we'll be moving to ABCD. Retailo is an example which started in both markets together, which is, I think, incredibly difficult to do, but commendable at the same time. So yeah, I think we are not, like, the founders are not starting off to solve for the world or solve for the region. They're starting off to solve for just Pakistan. But there's no reason why we are not capable of making really successful SaaS businesses. It's just that most of the funding is currently going into pattern matching and seeing models that have worked elsewhere and then just deploying capital there. But I do see, I think another reason why we don't have SaaS, sorry, I'm just going on a long...
No, it's fine.
But another reason why we don't see a whole lot of SaaS businesses from Pakistan is the lack of product experience. That as a skill set, because typically we've been, as a country, we've had a lot of BPO type services set up, so we have a lot of great engineers, but we don't have a whole lot of product talent, because product direction has typically always come from abroad. But that's being solved for as well. So yeah, let's see in the future. It's if someone wants to build out a global business from Pakistan, I think. Good luck to them, and I think hopefully they'll also get funded.
Thank you for your time. Thank you for being on the Misaal podcast. It was lovely talking to you.
Thank you for having me.
Thanks for listening to the Misaal podcast. I hope you enjoyed the podcast and will thank me by writing a review or sharing it on social media. Make sure you follow and subscribe so you don't miss the next episode. Thanks again. See you soon.